For perspective on TD, but also the broader banking sector, let's bring in Evan Mancer, President and CIO of Cardinal Capital Management. He joins us now. Evan, thanks so much for being with us. What to do about TD? How are you thinking about this? Very much a core holding for many Canadians.
Yeah, and a core holding for us too. We've held TD for 30 years at Cardinal, so it's kind of with heavy heart that we sold it. It's been a wonderful company. Increased the dividend for 28 out of 30 years, other than the financial crisis. But we do see risk in it now, and the big risk is the money laundering issue. They had a few employees arrested for fentanyl money laundering ring, which is obviously not great. But the question becomes, was this something that kind of slipped through the cracks at TD, but could have happened at any bank and it wasn't a major issue, or was there some serious deficiencies there? And what we worry about with that is we go back a year and a half and there was a regional banking crisis in the US. And during that time, it was like Silicon Valley Bank went first and then a few others. The regulators were down on hand and knee calling the well-capitalized banks, will you please come rescue some of the weaker ones? And TD was actually going to be buying First Horizon, which was also having trouble. And that acquisition got canceled by the regulators, citing deficiencies at TD. And they haven't really come out and said what those were, but it's a bit of a warning sign for us that there are some major issues here. And then we look at the broader market and we do see some attractive opportunities elsewhere that don't have this risk. And so, you know, with heavy heart, we let go of our TD investment of 30 years.
I mean, I want to underline that point because, I mean, you capped off a gain of nearly 4,000% over the last 30 years, so with dividend. And I wonder if that's what made it easier to let go, because you're talking about a company that weathered, you know, the .com, that weathered the financial crisis, the European crisis, all of these crises over the last 30 years. So cutting at this moment is significant.
Yeah, and it didn't make it easier. It probably made it a lot harder for us. I mean, holding a company for a long time, you always don't want to get emotionally attached to it, but it's hard when you've had such a good experience with the company. We have rode it through a lot of these issues, but those ones you were saying, they're all basically sector issues that are hitting all the banks. This one's a little more specific to TD. We still own the other 5 banks, which we like, and don't have plans to sell. But in this issue, it's more, you know, TD trading at maybe a slight discount reflecting these problems. But we worry that there may be more risk and downside than a lot of investors appreciate. And so we've decided to redeploy the capital.
Sure. You know, I listened to the TD conference call and they were as clear as they could be, saying this is just a U.S. issue. We know where we failed. We don't think that this is a broader beyond just the U.S. issue. But it sounds like, Evan, are you subscribing to cockroach theory, where there's one, there's many?
A little bit. And, you know, I guess the Warren Buffett line has always been good, that if no matter how well you drive, if you've got a traffic cop following you down the highway for 2,000 kilometers, they're probably going to find something you did wrong. And so we're a little bit concerned on that point. You know, I think TD is ultimately a reasonably well-run bank.